Just 1 second. Good morning, Colton.
Good morning. How are you?
Good morning, Sir Texas. Can you hear me? Hello, hello.
Good morning. How are you?
Morning, going well, you?
I'm okay.
Yeah, it looks like it's not too busy morning. I just managed to take profits. I got still two contracts left. One is at
Mm-hmm.
break even. Second one is at 24.
You're on a short,
Yes.
and I'm going long.
No, it's a previous day close, and we printing the trailing stop, so it's a quite nice area. This is why I've got the one contract in a profit, one on break even. I wanna see what's
Okay.
happened on open.
What London does. Yeah.
410, I've got the next TP, which is around the trailing stop area. Maybe it's higher than that.
Mm-hmm.
And then 400
This
is the
map
last one, which
shows 403.
yeah, 404 there is a
Oh,
quite lot of the resistance, so
oh,
support. So,
yeah,
so let's see.
right. I got in at 419 long,
Okay.
and I'm just keeping the brackets. I mean, that's what helped because if I take them off, then I lose. I
Yes,
mean,
that's
you know what I
like
mean. So I'll just let it run, and I go to break even. Just like
it's better to get the smaller stops and to be stopped earlier instead of hoping for the price will
right.
come
So I
towards
mean,
you.
right. So it'll go to break even at 15 points, everything except the runner. The runner will stay back 20 points.
Okay.
And then, so if it comes back at break even, then I'm out, right? Except the runner. But I have one contract left. So, but I'll take profit at the 10, 20, 50, and 100. So even if it continues, I'm only going to get, take profit at
From the
that. I think
last one,
if
yeah.
it goes all the way, yeah, if it goes all the way, it's $300, almost like 340 a trade if it does all of them.
Yeah,
But if it doesn't, hmm?
what we need to understand, and doing this way will help you a lot. It's not how much you wanna make or how much you need to make. It's to lose as less as possible, to take
Right.
as less
So I
risk as
don't lose
possible.
after 15 points. After 15 points, I don't lose any money.
Yeah.
So,
Quite boring open, but we'll see. Okay, everything changing to green. Oh,
hmm.
did you sort these candles? You know that
The what?
did you sort the Renko candles?
No,
Did you
I didn't short.
no did
Which one?
did 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 you manage to set up the Renko candles?
Oh no, I didn't. I just left it. Um, I started using the algo candles, and I don't know how you did the candles on
Yeah, so don't worry because as you see, the Renko candles on Trading View, there are ghost candles. So quite
Mhm.
nicely they will show you the trend, the chop and everything, but they're not showing you the move which is happening because it's predicting the move. But at the same time now it's showing we going up very quick, can turn and go the other way.
And that's on a 1 minute chart.
That's on 1 minute chart, yes. But as I'm saying, the Renko candle on trading view because on Ninja Trader, the Renko candle is quite accurate.
Oh,
It's printing in a real time and everything.
this is the normal. But see, you have traditional in three on there,
Yeah,
which is not what the standard is.
yeah, I've got traditional entry because this
Oh,
was the
let me
best
see.
working for me.
Okay, got it. Let me just see. Hold on. So you go to there, and then you go to settings.
You're going on the settings here, then you
Symbol.
bring.
Oh, I got it. I see it. Okay, I didn't know we could change that. Traditional and three. Okay.
Yeah.
Got
But we're testing the trading sub on my Renko chart, and
it.
it's
Hmm.
still printing, so it's not the best news for my short. Okay, profit bearish on 15 second.
Approve it. Bearish it came
Um,
up?
but on 15 seconds, so it's just like what Adam was doing on 15 second. We're checking the.
Yeah, I don't have that. I don't do. I will have to buy another. I would have to upgrade to see that. So. Oh my goodness. My daughter's just going to sleep because I was on her butt telling her, cheer and all this stuff. And she's like, well, I'm trying to clean. I'm like, yeah, but it's also 1:30 and you have to go to school in the morning. And we woke up late today.
Okay, yeah,
So
it's
she was
quite
trying to
late.
finish school. Yeah. She's
Okay,
like, but you want me to clean during between school and cheer? Not right now.
1 minute. It's here. Okay, I got a signal on Renko. The, we've got the. Okay, everything was changed. Right.
London, darling.
No, it's still
A
15
whole
minutes. 15 minutes for London. We're testing 1 minute now, so view a bit far away.
we're
What
on
is a 5 minute?
bottom of Sydney, the middle of Frankfurt.
Mm-hmm. Okay, that's nice. 1 minute is holding the price. Trend line for the short is up to 31.
Oh my goodness. Ah. So what are your thoughts? Do you think it's gonna go down? Further down? Yeah. How far do you think it would go down?
If you go and break 400, then that would be nice retracement from
Really?
that.
Oh
It
my
would be
God.
retracement from yesterday bull run,
Okay.
because yesterday was very strange for me that the bonds was buying, people was buying the bonds and the market was going down. Sorry, market was going up. If we break 400, then at 380 definitely it will come.
380?
Yeah. And this is the area between 365, 380, where quite a lot of the long orders is sitting.
Sophia, good morning. Very much on the same theme of China's property market, but without the tone of optimism, perhaps. We got Country Garden earnings today. What are you looking for from that?
The second one, we got the PLC. PLC is higher. Currently, this is temporary PLC. 35. Okay, moving both of my stop loss to 24, 25, 4.75. So we'll see. If you make a new high, I will be taken in profit.
Mm-hmm.
Morning. So Prudential today, they are reporting a pretty strong beat in terms of their earnings growth in the insurance businesses, and of course, mostly trading over in Asia, but listed here in London. And analysts at Citigroup describing this as a modest beat driven
Okay,
by
previous
Hong
day
Kong, which seems to be
close.
the strong pop. And also Jeffrey saying that there is
And
surprisingly
now dollar
very
will
little
try to go
negative
higher, so
news coming from
that's really good for my shorts.
and also HSBC. Now,
Dollars going
this
higher.
company, as I say, has
Yes, it's
mainly been
trying
focused on
to
Asia, recently sold
break out from
a
the
UK
downtrend.
asset management business, M&G. We can see analyst
So
consensus pretty strong
that helps NQ go up or down
that one, and it has
It
actually
should help NQ
with the dollar.
go up. Most of the time was correlation dollar against NQ today in the morning. Both of them was going lower as Europe was getting money from dollar, but now dollar getting stronger and hope so to see NQ going down.
equates to around 2
Hmm.
billion US dollars. Now, they say this is due to supply chain issues and also some concern around their tax credits and the interest that they're paying on some of their debt. And we're seeing some very negative analyst calls on this one this morning, including Exane BNP Paribas, who is already downgrading the stock to hold from buy. We've actually seen a couple of profit warnings in that sector, including from Siemens Energy and also Vestas. And this looks like the latest in a run of negative updates from renewables that have seen a whole swathe of glitches in terms of some of the wind turbines, as I say, supply chain issues. Yeah, you might need a new cashmere jumper. That seems to be what Bruno Cucinelli is doing. Well, at the CEO today saying that quiet luxury, so luxury clothing without any branding, continues to be strong. And they're reporting profit up around 50% in the latest half year, and particularly sales growth of 19% for the year ahead. Now, that stock has pretty much underperformed the big peers Burberry and LVMH, who have done a bit better over in Asia and also in the US. But this looks positive from the Italian company today, solely on the cashmere sweaters. It should be a positive one. Yes, absolutely. Ben Ram has sneakily used the chance that I'm on the show to publish a piece of this great headline. Now isn't the time for an obsession trade in front-end treasuries. I have to say, Ben's work is absolutely brilliant, and I love the fact that one of the things is we're having this debate that many people in the markets have. Ben and I have been very much on the same page. He has been one of the few others who have been consistently calling for higher yields. He is staring at that trade. I was not expecting to change tack. I woke up this morning and had a bit of a revelation on this front. I look at his view, and I have to say, I have a massive respect for Ben's work. Did it make me worried? I would say no. I think one of the points he's saying is this isn't a big turning point in the US data we got yesterday. That data isn't a reflection of it. But I think that market turning
This is
points
one mistake.
rarely coincide exactly with economic turning points. I think he is correct that it wasn't that suddenly we got one data point yesterday that kind of slightly changed. I think that the point is that we've priced priced in full optimism, and the market price action has now changed. That we're now surprised by softness in the consumer. Just after everyone got convinced by the idea that there was no such thing as a hard landing, we'd only have a soft landing, and that's why I think that it
Oh,
is
my
time
stop is
to
at
get
oh
long pricing
eight.
in treasury markets. At least in my
I'm
opinion,
not gonna
to
try to
me,
do 20
long-term
points.
yields are not going to go much higher, even though there's been no sudden change in the economy yet. The economy will fall off a cliff in the fourth quarter, not just yet. Okay, and where does
Yeah, I
that
got the
take us on
TP
our
at
assets
10
then,
to
Russ?
10 to
Everyone would
25.
say that it isn't all about the one data point, but you do see inflection point
Mm,
broadly in the highs we've
15418.
printed. The idea that this short-term treasury view
Yeah,
might play
398.
out from what you think about the yen. I mean, that's been all about interest rate differentials, hasn't it? With such ultra-loose policy from the BOJ and hiking at the Fed, and even with the pause from the Fed. So where does that take us on, for example, your yen view? Yeah, I'm glad you brought that because I think that's where this most direct read across. So one of the other most consistent views I've had the last couple of years has generally been very bearish the yen. I've been constantly looking for a chance for the BOJ to turn policy. I keep on thinking it's a few months away. I keep on thinking it's a few months away. But I never ever see the moment of when they're actually going to abandon yield curve control. And I still think it's a couple of months away. It's kind of seems to be for always that same time span. But I think importantly, dollar yen is always a yields play, as you mentioned. And I think US yields the front end of peak. So I think it's now no longer time to be bearish the yen. Is it time to go bullish the yen? That's probably something that requires more analysis. Maybe it is. But I certainly think the end of the long-term bearish yen trade is over. And just today, it hit a fresh low on a trade-weighted basis on a multi-decade level. So it's a great time to abandon the short bearish yen trade.
Ooh la la, come on.
Okay, plenty to talk about this morning. Then thanks to Mark for spending the past hour with us to update us on his views. Futures for European stocks then, the stock take starts cash trade in around 5 minutes time. Futures point slightly higher. I should point out US futures just dipping into negative territory. We'll be back with the European Open next. This is Bloomberg.
Okay, 3 minutes to open. Okay, TP done. Left only with runner.
And I'm out. Ugh.
How many am I cross?
10.
Oh shit.
10. 10. But it was from 18. 10 points. Now to figure out what I'm going to do, if anything. Or just
Go sleep. Now, what we've got so far, the short look good, but it's really not the best area to enter because at the open you can go at least 1 minute, which is at 22.
Hmm.
And this is why I put the stop loss at 24. If you manage to make a new high and break the 1 minute WMA,
Hmm.
then we're going higher. But everything telling me short. The trend line is at 28 and everything is red.
Right.
Where we got the 15 minute, it's at 43. Okay, we got the open. Okay, 22, which is a 1 minute.
Bottom of Frankfurt, right?
Hmm. Now for bears, they only really stay below 24 area, below previous day close. And okay, trade is trailing stop for bear start printing as well. So we'll be choppy and range
Um,
because we got one at the top, second one at the bottom. Okay, took my
mhm.
stop loss. And I'm not touching it now till we go above 41 or go below oh 07. Just week off my stop loss. Yeah, and that's what most annoying because I checking the candles in only week of my stop
Uh-huh.
loss and it going
Mm.
down. So
Okay, so that's the latest on the European data picture. And Sophia, if we could pivot to thinking about China, I was mentioning that there was perhaps this risk-on theme coming through this morning where
Under the
there was a
40
suggestion
and the
that
4-hour candle,
risk might reduce, and you mentioned how that could be significant.
seven.
But actually looking, I was talking about how this was sort of positive driver for Asia, and we do see MSCI Asia Pacific up by 0.4%, but China's not driving that, is it? I wonder where we are on the China theme this morning.
Right?
excuse me.
It didn't break through the WMA. It like fake.
Yeah.
Yeah, so no sign of that bazooka yet. And you mentioned last hour to us, so we're still waiting for the numbers out of the developer country Gardner, so we'll keep an eye on that. As you said, it's having trouble struggling to pay one of its creditors and serves second and third tier cities was the sort of briefing you gave us last time. I want to get your thoughts though on mortgages in the UK housing market because as we sit here with the start of the European trading day, and I see UK yields going higher once again. They're a good company, obviously.
721. We can get back up there.
But a lot of tension in the UK housing market right now. We've had some recent indicators, and we're
They're
hearing
going
more
down
in
without me.
mortgage approvals.
But if we could get back to 721, you know, we can take a short. Now, let me see what happened.
Yeah, Sophia, thank you very much, Sophia Walter, Cost of Our Markets Today blog. Thanks to Sophia for her time this morning. And you can keep across the blog, go to the Bloomberg UK website, click through to it from there, or go to TNID.
420.
Let's get
Hmm.
a check on some of the individual stocks that are on the blue chip list
I
for
didn't
retail
see that till right
this
now.
morning. So, as expected, it's a messy day in European renewable stocks. Ørsted falling around 13% over in Copenhagen as they announced a $2 billion impairment on their US business related to
Yeah, I
Storage.
should go break even when I saw the trailing stop, but that's okay.
We're seeing that coming
Hmm.
through in
No
further
regrets
Vestas, the
yet.
European
Oh, when you start turning the bearish shirt, the bearish trailing stop.
Yeah, I should go break even instead of staying in a profit because yeah, this stupid candle weak me off.
Mm.
We're also going to flip over to another big mover in Denmark as well. This is Coloplast. Now, this is a medical technology company announcing after the close yesterday that they are raising funds at a discount to the
What
closing
is
price, of course, through a takeover of a skincare company that they recently announced they would buy, and that stock heading lower, nowhere near as much as the other stock on that index, Ørsted, but still a pretty big move for that one. In terms of the other stocks, fun stocks to watch, both going higher. So Prudential, strong returns in their Hong Kong insurance business, better than analysts expected, according to Jeffries in a note this morning. And Bruno Cucinelli benefiting from all those quiet, luxurious cashmere sweaters, up 5%. They're seeing a 50% jump in operating profit and rising over in Italy. Then in terms of the ratings changes, an interesting one out today. We've got a downgrade for Heineken over at RBC. Yesterday, that stock was upgraded at JP Morgan, but RBC today saying that Heineken's premium
Okay,
brands are
I'm
falling
short.
behind the big rivals. So this is beers like
Yeah,
Sol
sure.
and also Amstel as well, which are owned by Heineken, not performing well according
Can I
to
ask why and
RBC.
where?
We've also got Kingfisher.
Like, it's, where?
409 because I going for a breakout trade.
Oh, okay. I didn't get a freak out. Oh, I don't know. Oh, duh. I'm on a.
Ahead of earnings due in around 1 month's time. And Total Energy is pretty much unchanged, but they've got a neutral rating over at City reinstated, but that is actually technically a downgrade because City was previously a buyer of the stock. They're moving to neutral, but not too much of a reaction there. That broker move was mostly due to the changes in oil prices, so they've adjusted their estimates. Total over in France up around 0.2%. And finally, Frankfurt Airport gets an upgrade. This is over at
Amazing, first TP done. It was 5 contracts.
Mm-hmm.
They say some of the holidays from Frankfurt places like
Okay, one account I will close because I don't want to overdo it and risk too much. This will be this one. One account still open. Yeah, my stop loss was 7 points. First TP was at 5 points. Then I got
Mm-hmm.
10 and a runner, but I opened 7 contracts.
Okay.
Come on, dollar, go higher. 'kay, we going to 400. I'm moving my take profits.
Mm-hmm.
78 and 56. Yeah, 400 look like holding the price nicely, as we thought so.
What's holding the price, Colton?
400.
Oh.
We expect to see a bull sitting here. Yesterday there was nice area of consolidation.
Mm-hmm.
But I don't want to take too many trades in and out. So, and I mean nice profit. So let's see what this will bring. Still, I'm more bearish than bullish. Yeah, we need to break out from 400 because that was our consolidation area and we can see bullish liquidity it's sitting here. Dollar going up and I can see that yeah we are dedicated to go lower. Okay, from the news today. Punch CPI rate. Okay, we've got the VIX open, almost neutral from the close of yesterday.
Mm-hmm.
Can we just break this 400?
They have a strong sell, but I don't know.
If you check for our forecaster, it's really nice showing why we are in a short, why the short trend is working. From new 4 hour candle, we are staying on a 4 hour and testing the previous 4 hour close 1 to 3 times.
Mm-hmm.
And at open of the UK, we just tested it was last test of the previous 4 hour close and down we go.
What's the lowest that it can go?
The lowest it can go.
Mm-hmm.
Okay, the next area will be at 27, 327. Where is the liquidity hanging? My next TP is at 378. And then I will keep the runner.
But you got in where? At 400?
Oh, 378 for me. This is the lowest where it can go for now.
No, but where did you get in on your short?
I get short at 409.5.
Oh,
Yesterday POC is at
Okay, so maybe it is soft landing in
73.
the Eurozone. I mean, I know some economies have been in recession already, so maybe that's not possible. But how would you describe the landing that the Eurozone should expect?
Value area low of yesterday is at 205. We will see. Yeah, I'm interested in 78 for now and nothing else.
Hmm.
Quite happy that I re-entered the short.
Annika, let me tap into your knowledge of the commodities market. I know for many years that was your sort of specialty. I'm looking at oil prices, 85, 88, so up a touch this morning on the Brent price. I was looking at two pieces of research this morning that suggested higher prices. One was that the Saudi Arabian leadership might
Yeah, as I
decide
telling
to
us, we are
double
a
down
little
on
bit
getting cuts to
oversold
production,
here.
extend those cuts to production. Another suggesting that stockpile
Oh,
data might also suggest that prices can go higher. What are you seeing in terms of the drivers of oil prices?
and you're looking to hit TP of 378.
Yes.
So when the contrarian candles come on, what is that supposed to tell us when it's a white candle on the old algo?
It's telling us that this is the good area for the price to change direction, or we
Then
will
it's
be
gonna go
just break
lower, right?
or we will be breaking the levels. So it's not telling you anything like go short or long. It's telling you do not open the trade now. If you are in a trade,
Oh,
this is the time to wait for it. When they click off, then it's telling you, yeah, you can go long now. But so far, they're not telling us anything.
Macroeconomic research at Wisdom Tree. Coming up on the program, a big win for the crypto sector sends Bitcoin surging. More on the grayscale SEC ruling next. This is the
Actually, they're showing us that, yeah, we will be breaking the levels.
hmm.
Okay, Renko print the breakout bearish, which is nice. We will see if this will give me the breakout or not. Yeah, we create nice liquidity at top of the Sydney today. So definitely will come back there today.
Hmm.
Okay, if you'll break the 87 or 86, then definitely I'll get my TP quite quick. I don't like this such a big volume in this candle. We need to leave the cheap area. Okay, this is going up. Dollar got a strong signal. I'm going for a new high.
Where do you get the strong signal?
On dollar. You can see dollar got a strong, not NQ. To go higher, and dollar is about to leave expensive, and NQ to leave the cheap box. Come on, the POC is not far of yesterday. Do we start to go sideways building the orders?
Oh, goodness.
Alexa, stop. So yeah, we can see how nicely we're correlating because dollar reject the high and we reject the low. So retracement start.
Hmm.
Then we can retrace up to 12 for 12 where it's the 1 minute WMA and previous day close is at 15. Widzę gains.
This is markets today. We're 30 minutes into the European trading day here on the top headlines. Room for pause. The latest US jobs and consumer data offer support for investors speculating the Fed is nearing the end of its tightening campaign. Bloomberg reports China's biggest banks are preparing to cut interest rates on existing mortgages and deposits in Beijing's latest measures to revive growth. Plus, the ECB's job may not be done. Watch for inflation data out of Germany later today after early signs of sticky inflation in Europe. Welcome back to the break room, everybody. So 30 minutes into a European trading day, which gives us this, a flat session for Europe. We had expected perhaps a little bit more green on the screen this morning. We do get some green. That comes from the FTSE 100. So the FTSE 100 is up by around 0.5%. The CAC 40, though, and the FTSE DAX underperforming a little. In terms of the drivers of that, I mean, we ran away yesterday with the US data, didn't we? We got excited about the weakness in the days and what that means for the Fed hiking cycle. So that pushed stocks higher in Europe. It certainly pushed stocks higher in the US session and into Asia. Now, US futures are a little weaker, down 0.1% on E-minis. Nasdaq futures down 1/10 as well. And if we look at the sector breakdown, basic resources, the best performing sector, along with banks, that's a sort of London positive sector picture, if you like. Utilities, technology, travel and leisure, those are sectors that bring up the rear. But around 2/3 of sectors are in positive territory, which is interesting considering the overall market is pretty flat. Now, let's get an update on the individual stocks in focus this morning. Joe Easton has a rundown for us. Joe.
So one sector firmly in the red is utilities. You mentioned briefly there, and this all being driven by Ørsted. I just wanted to reiterate the effect that this is having. We're seeing a number of firms, around 20 utility stocks declining. RWE over in Germany, EDP in Portugal, and Iberdrola over in Spain are a couple that I've brought.
Mentally, I opened another short at 20 SR92.
And not what?
It's a,
92?
yeah, it's mental trade now, short. I just testing something.
But at 392?
Yes, I am still in my
Oh
short
my God.
from 409.
Oh, you're still in your short.
Yeah, but mentally I
But you,
opening, if I want to add to the short, this will be at the 92, which was just now.
okay. And you're still seeing it to go to 70.
Yeah.
Reporting earnings before the open today. They only actually reported their preliminary results around.
At 92, you're taking a chance of it going against you and taking your profit that you've already made.
It's only the mental trade. So,
Oh, okay. Then I was like, wow, okay.
yeah, I just testing something and it's telling me that this was another entry for short.
Okay, got it.
But again, in the negative, so another sector that is declining today. In terms of the gain, there's a pretty UK focused look. Firstly, in the insurance market, we've got Prudential and also Direct Line, both gaining Prudential.
Okay, so first TP will be done, 5 points.
Earnings for that firm, mostly Asia focused. That surprised analysts, given there are competitive
And the other was very small, only 2.5 points.
And then Direct Line this
Hmm.
morning announcing a new CEO coming over from Aviva to take that job. So that is something that's hung on that stock for a while. The former CEO did stand down around 6 months ago alongside the firm scrapping its dividend. So perhaps a change in strategy there. And then Insten, a shout out for them. This is a small firm that does pharmaceutical technology, so IT for pharmaceutical stocks listed on AIM, based up with sunny Stoke-on-Trent up in the Midlands, and that one gaining 39%. Finally, at the top, bringing up Bruno Guglielmine's known for its best gain in around the year, up 6% in Italy, given the strength of some of their cashmere sweater sales.
Okay, from Stoke on Trade, back to the Cashmere. Jay, thanks very much, releasing from our equity team with a comprehensive roundup of the big moves on markets this morning. Now, it's been a big week in terms of European sector. We still get bigger with the oil side, possibly
I
starting
forgot
to
to
get
remove Kung
Yes, you did. On another hike from the ECB. Is it too early to say?
Huh?
Let's see. Our correspondent Maria today
You know, cable, extension cable. There's a short one that I used yesterday, but it's no longer. No, no, no. Like a plug extension cable like
Colton, what was your target? Again, at 70 what?
78. But I can see nicely if we can break 78, we're going to 58. But that will be for my runner, and then I'll be trading.
Mhm.
You can see now dollar is going down, and NQ going
Uh-huh.
down, or NQ going down, but VIX going up.
Okay. Yeah, I used to play like that, but then one time it didn't work, and I was like, I can't do.
Yeah,
Meaning, I used to look at the bit.
it won't always work. You need to see when the
Right.
correlation actually it's helping you, when it's not. It's not every day the same, or every time of the day it will be the same.
Yeah. I mean, what number is that? We're at the green fib extension, also on London.
Mhm. Yeah.
Beyond the football, plenty to say about football on another occasion, I'm sure. We also got inflation from the key states in Germany.
Where's the WMA?
May
409. The WMA is way up there.
does that add into the broader picture as we wait to get
Yeah,
clarification on
15
that later
minutes, it's
today?
much lower.
Yes, of course, and we also saw an uptick, and it is
51.
moderated, of course, on an annual basis, on a monthly basis here in North Rhine-Westphalia. But as you know, a lot of market players and analysts and
I
economists
see it touching the WMA 15 minute and going back up.
today. Now, it is an uptick, but
348.
when you look at the general German number, however,
But that's just my opinion, of course.
It's happening quite often. That
Yeah, I've been seeing that. So every time it hits the 15 minute.
Yeah, interesting to see the market reacting, bond markets reacting to this data set, then Maria, perhaps reacting to treasury moves as well, but maybe driven by the domestic story. And we see those yields up across the curve, certainly in Germany, all the way across the curve. We see those yields a little higher this morning. Thanks to Bloomberg's Maria today with an update from Brussels. Coming up on the programme, we'll talk UK housing. Zoopla says UK home sales are on track to drop to the lowest in over a decade. We will speak to Richard Donnell, the property portal's executive director, next. This is Bloomberg.
Managos.
Well, if it touches the WMA, I'm gonna take a short
Mm.
at 411.75. No, wait, sorry,
408.
408.
This is markets today, 41 minutes into the European trading day, and very modest gains across European stocks, better in London, a little more negative elsewhere, certainly the sector DAX flirting with negative territory, and US futures just down into negative, down around a tenth of a percent on NASDAQ futures. Let's think about the UK housing market, though. New data from the property website Zoopla shows that UK home sales this year
We've got a
are
hidden
set to fall
ball
to
on
levels
ręka.
since 2012. However, there may be some bright spots. The
Got
report
some
found
big
that
buys
affordability in London has improved for
slowly
the first time
coming
in over
in.
a decade. Joining us now is Richard Donnell, Executive Director of Research and Insight at Zoopla. And I suppose that is a silver lining, isn't it? If prices drop and if volumes are dropping, then that would be a silver lining. But let me start with the negatives around this then, Richard. And I'll start with your expectation for how bad things get to the housing market. What do you think the trough is going to look like? Paint a picture for us.
I think the big drop has been on around activity levels. This big drop in the number of transactions down to 1 million. Others thought it would be lower than that, but I think it's unfortunately we could be trapped in a period with much lower transaction volumes. House prices are holding up better, but until we get prices dropping lower, affordability improving, you're not going to get that improvement in transactions. So transactions are likely to stay below their long-run average over the next year or so.
Okay, and how weak do prices have to get to trigger
So
more
why
transactions? I was
it's
looking at
slowly
Halifax data,
recovering
running
from the
around
drop,
minus 2.5% down on the previous
but
year. We're going to get data
RTY,
from Nationwide, I think this
RTY too.
Friday, which is shown as, well, the estimate shows a drop of 5% year on year. At the start of this hiking cycle, though, I remember some economists talking about
What's the VIX doing? Is the VIX still going up or not anymore? That's YM, RTY, VIX.
VIX is make the new high and now it's just stalling. It can drop a little bit up to 200 moving average and then I would like to see it going up, but yeah, we'll see.
Which is why transactions are suffering more than prices. So I think we're going to keep seeing sort of low single-digit nominal house price.
Now it's a wait time. The entry long was at 91.
Because we didn't get the big overreach and build up on use of credit that we've seen in previous cycles, and what banks pursuing forbearance strategies, using interest-only mortgages to support people get through the payment shock of moving on to higher rates.
So banks perhaps being supportive in that
Okay,
regard. And how
for printed Polish, prove it.
Because this, according to some people I've heard talking about this, seems to be a big feature of the markets right now and differentiates this troubled period in the housing market from previous troubled periods because we didn't have quite such a big pool of buy-to-let landlords to sell. So how are we seeing those buy-to-let landlords behave this time?
Well, I think 1 in 10 homes for sale was previously rented. So this has been a trend that's been running for the last 5 years. It started with tax changes in 2016, then it's been regulation. Now it's higher mortgage rates, forcing landlords coming up to refinance to think about, what do I need to do? Do we need to put in more equity? It typically is hitting there's a third of landlords who have a mortgaged buy-to-let property with a higher loan to value, over 50% loan to value. So it's not hitting all landlords, but it's reducing supply in the rental market, demand's up in rental housing, and so rents rising by 9% year on year.
Yeah, that's 400 again.
On the rental side, and in terms of their attitude to selling and reducing prices, do you see buy-to-let landlords? Are they the side of the market that is going to be forced to cut prices, Richard? You said that hasn't really been happening very much yet, but is that what we're going to see driving this?
I think it's the price reductions are sort of coming across the board. The biggest pressures in the south of England. Buy-to-let landlords tend to sell a property that's worth about 25% less than typical homeowner property because they're smaller. Those probably are more appealing to first-time buyers. And so I think there's a market for some more affordable, smaller homes at the moment. The real drop in transactions we're seeing is coming in that 3 and 4 bed family home market where people often just don't need to move.
Okay, so just deciding to stay put for the time being. What about cash buyers? It seems quite extraordinary the amount of cash buying we have in the UK housing market, given the price of housing. But where are you seeing? The report mentions cash buyers are still in the market. So where in the UK are you seeing that phenomenon?
Big prove it bearish. Oh, Renko, I've got the prove it bullish. Okay, I'll be back in a minute.
So yes, cash is an important part of the housing market. The real squeeze is coming through in those mortgage buyers.
And what more could the government be doing here, Richard? I mean, you mentioned how banks are being creative and thinking about interest-only plans for people to try and cushion them from these higher rates. What is the expectation of what government might do?
I think that's important government can really is just keep supporting house building in this country. We need more supply. More supply will boost choice, release some of the pressures in the rental market. I think that the government has done what it needs to do for the letting industry. I don't think we need any special support schemes. I think we're sitting in a position here in the market adjusting from a period of low mortgage rates to high mortgage rates. I think the mortgage regulations that were introduced from 2015 onwards have had a big impact in softening some of that blow. So there's not much more the government can do than actually focusing on building more homes.
And free.
Okay, thanks very much, Richard. Thanks for your time. Richard Donald, Executive Director of Research and Insight at Zoopla, joining us there with an update on the UK housing market. Let's go stateside, though, for an update on Hurricane Idalia, which is nearing the coast of Florida. It's been moving north at around 50 miles an hour. This is the National Hurricane Center. We're getting these updates regularly. We'll show you live pictures of Florida. And this has now been upgraded. It was upgraded to a Category 3 hurricane on that level 5 scale. This is CP in Florida that we're seeing images of, and expectations that we see a catastrophic storm surge and destructive winds.
Okay, 1 minute change green.
Yes, it did. I see that.
The case for raising rates will discuss inflation.
So I'm debating if I should take a short here at 406 because it's green. Um,
The latest on the weak data out of the US. This is Bloomberg.
I will wait now because like everything is green. VIX, dollar.
uh-huh.
Everything showing us green.
So now I would literally have to wait for me for us to see if we're gonna hold the 405, the 406.
Okay, this is 50% of the swing. You can see on the scalper the bulls are still very strong. VIX is dropping.
Huh?
VIX is dropping.
Oh.
For some reason, I still don't have a huge hopes for the bulls.
And I didn't take a short because I was just undecisive.
Yeah, but you did done nothing
So no,
wrong.
that's fine.
There is no
Yeah.
short yet. There is a lot of greens. Okay, I will try the short now.
You're gonna short where?
402.75.
$75.
Can go for 15.
Okay, that's at 431. Where are we? At well, we're kind of in a cheap area. 391.25 to 394.50.
Morning, Anna. Definitely feels the ECB could be in the direction of a rate hike in September. We saw the not really around inflation numbers coming in at 0.5%. That was way higher than 0.2% that we saw in the month earlier. And this data series has a correlation, uncanny correlation with the national series, which we are due to get later. And what we saw in Spain as well showed that inflation is pretty firm. Those inflationary numbers mean that the ECB has to go probably from 3.75 to 4% in September. I don't think there's a choice. We've already seen the hawks lining up for a hike, and this data print is likely to embolden their case. I think the
Fed, there is a very high chance that the Fed may pause in September, but I don't think it's the end of the hiking campaign, simply because what we are seeing with the Jones data last night and the consumer confidence data is pretty much in line with what we have been seeing throughout this year, except for April, when we got an uptick in Jones data. We have
It's
seen it
struggling with the
every month.
WMA.
What that shows is that employment
Mhm.
payrolls for this cycle have peaked, but that is far from saying they are at a turning point, and that will mean that and real rates are still ticking higher, as we learned from the New York Fed researchers a couple of weeks ago, with them saying that the real neutral rate in the U.S. economy is going to accelerate to 2.5% by the end of this year. If you combine those two, what you think is that the Fed may pause in September, but it's far from done.
And GRK said if it were to break something, like say if it goes back to where it was,
I think there is
what do
I
you
believe
say?
that the inflation may peak by
He
Not sure.
said if
February, as researchers have seen in
1544
the previous
breaks,
cycle, but there is, I think,
you
there is
could
a
see
risk that the markets are
15520.
pricing the risk that inflation is going to be
And if we didn't break it, which we didn't, it went up to
behaving at, and
470.
that's something that the markets are
We should
blocking
go
because
back
they
down to
think that inflation
420,
is going to
and we
continue
did.
indefinitely for the
We
next
didn't
month.
go.
And
Yeah,
that's the
okay,
reason
yeah.
today,
420.
420, yeah, we passed 420.
Yeah.
well, I'm still friends. Maybe a little bit prone, right? But well,
Yeah,
what
I'm debating if this hold 405.
the point to remember is
I
that
would
the
like to take a
markets have been
long.
asked and paying for a rate cut since the start of the year, and that hasn't happened. They
Previous day
expected
close
rates
will
to
be
go
area
lower
where you
in
can
July.
make the
They will
decision
see
if you
how
want
things
to
go between
try
now
long
and
or
the weekend.
short at
Let's
415.
see
That,
how long this economic
that
recovery
what?
plays out. I think
At
there will be
415
a
is
lot
a
of talk
previous day
today
close,
about that
the
being
nice area to
one-sided.
decide
I don't think that there is
if you want
enough
to
room
go
today
short or
for
long.
the U.S. consumer to
But
capitalize.
four what? 415?
415, yeah. The previous day close.
Oh, okay. 415. I'm looking for.
Much smaller candles, ITR drop look like rebuilding the orders, this time probably bullish ones.
Hmm.
We got the news
Mm-hmm.
at 9 a.m. from Credit Suisse and 9:30 it's from UK.
Market structure midpoint went above price.
26.
I'm even not seeing 396. We have 125. Gosh, how's that?
Oil got the rejection now.
Oh, there I see that previously high close, previous daily close. Mm.
Continuation to go lower for the VIX. Yeah, Credit Suisse released the
So,
news.
when does the news come out?
This is Credit Suisse. They're still pending. Let me see, economic release. Okay, almost as expected.
This is WMA 405. Let's see if it holds 405.
Well, good morning, everyone, and welcome to the Pulse. I'm Francie Michael here in London with the conversations that matter. And here's what's coming up on today's program. A bellwether German state posts a surprise CPI jump in August, suggesting that the ECB may have more hikes ahead, while Spanish inflation quickens again. The latest U.S. jobs and consumer data offers support to investors speculating that the Fed is nearing the end of its tightening campaign. Plus, UK property portal Zoopla says home sales are on track to drop to the lowest in over a decade. We'll bring you the latest mortgage data later this hour. So first things first, good morning. Happy
We have a bullet.
European
When
markets.
does that
We've
turn?
seen a lot going on actually across the board, and of course I'm reminded that it is bank holiday on Monday, so happy Wednesday. There we go. We're way ahead of where we're expected to be.
Yeah, we're staying on a 1 minute WMA and we are above its green,
The markets
which
are
is
looking
nice, really nice signal for the bulls.
European stocks are wavered a little bit, so there's
Yeah,
some
but I'm looking at the market
signs
structure.
of
Let me see if it
stability.
printed a
The
new.
bond market got off the latest data suggesting that
I don't.
inflation may
I
not
don't
be
know when
moving
it
with
printed it.
retreat in Germany. In fact, if you look at Germany's 10-year yield, it jumped 4 basis points after the consumer price index, which is in the
No,
bellwether
that printed
state
wrong.
of North Rhine-Westphalia, rose in August. What this means is that the waters are a lot more muddy for European policymakers. Also, after in the U.S., we had a very different story. So let's also look at treasury yields in the U.S. slumping to the lowest levels in more than a week. This is after the bigger than expected declines in wages, looking at job creation, consumer confidence,
Where
which
is
is a counter
it? 405.
on what bond traders did in terms of assigning lower odds that a Fed interest rate hike this year would happen. So that's the impact that it's had on the U.S. two-year yield. And then the other big story today, global stock rolls are back in the driver's seat. And this, without a doubt, is one of my favorites
Oh, good.
data points that we're looking at. And this is thanks to David Ingrid for putting this together. It's the Fear Greed Index, and it's back in positive territory. Now, a reminder to everyone that in traditional markets, the Fear and Greed Index measures investor sentiment based on factors including volatility, momentum, and demand. And so you can see there that they seem to be back. What that means going forward, usually September is a busy week anyway. Then we're getting more breaking news. So we had
Oh, huge rejection
Germany
from
was
oil.
this is the bellwether state, but we're
What happened?
you know,
No, oil is dropping very hard.
Oh, okay.
so if you look at Bavaria, the August
I
jobs
don't do
report
oil,
rising
but
to 0.2%,
looks like it's going into the WMA. It doesn't.
fuel price rising 0.2%.
Okay.
The general fear
Yeah,
is
I'm so indecisive. I probably won't even get in anymore because I just don't.
what the ECB
I'm.
does next.
And
As long as we
is it
remain
shop?
on
It's
trading session,
ranging, which I don't do well in ranging.
as expected. The other piece of breaking news is China.
They're building the
This
orders.
is a story that we've been following for quite some
Now
time.
we need
China
to
has
go
been
below
a central
90
bank
to be
target,
bearish.
a shadow bank genre.
Below what?
Again, there
90.
have been a number of policymakers
Oh.
putting in place a number of things to try and support the consumer over in China. Unclear whether it will give a boost to
Okay, but I got the provision 15 seconds for the bearish.
of course, properly and shadow banking, as we've seen in Europe. So we're now seeing the first step from the government to try and deal with shadow banking, or at least look at what's inside some of these shadow banking financial services. Now let's get back to big story of the day, which is European inflation. Let's get to Jan Arando.
Just give me my
Jana,
78.
what are your thoughts on German inflation numbers this morning? How much does it complicate the picture for the ECB? And good morning.
Good morning. Well,
Ah, his food is ready, I think so.
a clear answer from inflation anyway,
It will be
because
cooked.
after all, what can 1 month of inflation data tell you? But of course, what we're seeing is offering even fewer answers than I certainly had expected. We saw a much sudden and detailed increase in consumer prices in Germany, the biggest, most populous
400.
They're slightly more in
Can
line
we
with
go
the
below it?
estimates economists have in their books. But what that means, and that's what's really important, is that inflation in Germany will stay above 6%. And obviously that cannot be satisfactory to anyone. Inflation accelerated also in Spain. In France, it's expected to accelerate again. So a lot of bad news really for the ECB as it prepares for the upcoming meeting.
Yeah, and then how difficult is it actually to be the ECB in this point in time, especially
Can
with
I
the
Renko
jobs
change
number,
to red?
changing the narrative at the margins
They
for the Fed
didn't
going
manage to
forward.
prove it.
If you don't have a convergence, it makes it much harder, I guess, to fight monetary policy.
So we'll see
Yeah, I mean,
how
simply
low
put,
we'll go this
at the
time.
moment, it is very complicated. You have an economy that is slowing down. You have inflation that is proving very stubborn, and you don't quite know how that last leg of policy transmission from that slowdown in the economy, from weaker demand, will actually filter into inflation, given that you have this tight labor market, that firms are retaining their employees. And so that makes it very complicated. The one thing that policymakers still are waiting for are updated forecasts, so they might actually help them, find answers to those very questions. They are in the process of being compiled at the moment, so we don't know what they are going to show. But my hunch is they're not gonna have clear answers either. So what we listening to policymakers over the past days, what seems to be emerging is a leaning among the hawkish community in the governing council to go for that final hike, or that one more hike in September, take the deposit rate to 4%, because they say we haven't conquered inflation yet. It's much safer for us to err on the side of doing something
Come on, go lower, go lower.
rather than not do anything. So market is pricing that at the moment as well. So that's where, what I would expect from this point of view.
Jana, thank you so much. Jana Rando there in Frankfurt. Now joining us to talk more about inflation figures and what we can expect from the Fed, HSBC Global Chief Economist Janet Henry. Janet, always great to have you on site, but especially on a day like today where there's so much inflation to try and understand. How much does this complicate the ECB's job going forward? Again, I know it's 1 month. I know it's a big economy, but it's really one of the leading ones. Could we have missed this inflation trend?
No, I actually think that it is a continuation of the trend. If we move on to the US, but actually inflation has been a lot stickier in the Eurozone.
Wow, the trade on oil would be amazing. That was probably the gains and
One thing I would point to
huge
is
drop.
that the oil price, the Tyler figure, was something of an outlier. We've now had something from the
Like
United
50
States
pence,
that
50
prices
cents
there.
drop already
But we have been
in
looking
few
for a
minutes.
rise in September. We think that will be the peak. But the growth numbers are weak, the PMI is a weak, but we need to think about the
VIX is not moving.
for the economy, and the ECB is aware of that. The risk is now arguably of stagflation.
But so, Jenna, what does that mean? So is it going to be communication? What's the biggest job right now for the ECB? Because we have countries like Italy that are blaming everything on the central bank.
Well, we've had something of
Green probably got
at
15
that
seconds, but everything looks so bearish for me.
And not just Lagarde, from Powell as
Everything
well,
looks bearish to me.
consistently higher rate of inflation.
Except the ES and VIX background are green and a bond is green as well.
Has a particular issue regarding labour markets. Central banks always face pressures from governments, and so it's easier to blame central banks. But actually, a lot of the fiscal support is coming from the governments, and not so much just national governments. In fact, our European economist published a piece this morning all about the recovery fund. Remember that? They haven't spent much of that yet. A lot of that is going to be feeding through into the economy over the course of the next few years.
So, Janet, when you look at it, I guess the ECB, is there a concern that they want the credibility so badly that they'll over tighten and then push basically what's the biggest mistake, right? If they hold off higher interest rates, or actually if they're too loose.
Well, this has been the risk. Which is worse, the risk of doing too much or doing too little. We need to remember that central banks have one goal, and that is price stability.
Can we lose this retracement?
Credibility. Now,
Huh?
also, ECB has
I'm
said
just
clearly
thinking,
sustainable
can we do this retracement or not really?
but therefore, given that they're
Mm-hmm.
currently late on price
I'm gonna just
action,
wait for the
they will be
352 or
signals
whenever it
into
touches the
the
15 minute
market
WMA, and I'm gonna take it long
because
because I
Okay,
missed
now
I
seems to be
missed
more inflation.
short.
It
this
is
little short.
inflation specific
Yeah,
demand
because I was
in
undecisive
China and all of the implications of that
on
continuing to impact
entering.
the
It was
economy.
green, that's why,
Hard to
Mm-hmm.
say that we've
and it
seen
turned
price cuts
red.
that we've done in the last 12 months through to the real economy. But it's unclear if the lagging time is 12 months, 18 months, or could actually take longer.
Well, monetary policy works with long and variable lags, and we always think about monetary policy impacting on the
Yeah, VIX
demand
didn't move
of
at
the
all.
economy. What does it mean for the labour market?
That
What does it
way?
mean for consumer
VIX
demand?
didn't move at all.
Arguably, what does that mean
Okay.
through the
Dollar as well,
export
it's
channel?
stalling here.
But we need to consider the fiscal side, and we need
The
to
biggest move
consider
for the
the
last 10
supply side of
minutes is
the
on
economy.
oil,
And it's
which
pretty well
really
without a doubt
hardly
that the
dropping.
central banks are going to continue to struggle with. But it's not just a question
I
of
will be
how
happy
many
if
rate
NQ
hikes.
follow
We
it.
know the inflation rate. Whether it's one more, two
Mm-hmm.
more, or no more, Morgan
Because you're
Stanley
in the
and
long.
Goldman
Just kidding.
actually
The short,
expect
yeah.
they have to say high
I
fours,
mean, you're in the
low
short.
fours
Yeah.
will eventually be cut. Financial markets always want this V-shaped recovery of 500 basis points on rates. We may never get there. It may just be a quite an extended period, and the rate cuts, when we get them, actually being remarkably
Okay,
modest.
we will be
But
testing
usually
low
it
of
depends on
London.
what the US and the Fed does and what the ECB needs to do going forward. Or again, when you speak to traders this morning and say, look, this has muddied the waters because after the policy
Renko.
mistake yesterday, we thought the Fed would do one thing,
Trailing
and
stop
now the
bearish
global
start
economy
printing,
is
that's
missing that point.
nice. And everything
I
look
think
bearish
there
on
is a difference
Renko.
between the US and the Eurozone, and a lot of it does relate to the labour market and to the wage data in particular. Now, we think that the Fed has peaked, but there is a chance, and certainly don't expect a rate rise in September. Of course, there's a chance that they have to do one more. But yes, we have got some rate cuts in 2024 from the Fed. We've got nothing from the ECB, and we feel pretty certain that they will be raising rates in
London
September.
holding the
Small
price.
cuts from the Fed, and again, when we hear central bankers in press conferences or in interviews, they're really at pains in reminding everyone that we're not going to go back to the zero band.
Well, we're not on any plausible central scenario at the moment, but a lot can happen. We can
Yeah, we got the,
so,
this is the third rejection from
not
there.
rule out anything, particularly if there were to be any risk of any kind of financial crisis. But
Which is not in the base case.
absolutely not in our base case. In fact, we've never been in the traditional recession camp. The market was convinced it was going to be first half 23 recession,
It's quite a nice big rejection.
second half 23 recession, and now it's going to be a 2024 recession. It's not
But
going to
luckily
be a
we're not
traditional recession.
oversold
It doesn't mean
anymore.
we can't have 2 or 3 years of extreme well
No,
below
we're not
where
oversold anymore. RSI couldn't
Oh,
come
okay,
back to
got it.
50%, so
but
that's
the
good.
Mm-hmm.
demand side of the economy, the labour market weakening, slowing consumer demand. Consumer demand has been booming in the US. Of course, it's going to slow and slow markedly, but the speed with which it feeds through to inflation,
But yeah, the rejection was.
aggressively, I think will take some time. So we have just very modest cuts.
What are you waiting for?
Thank you so much, Donna Henry. Of course, stay with us and we'll talk a little bit about China next. And then after that, we'll talk UK and we'll get the mortgage numbers. So stay with us. This is Bloomberg.
Oh, this is going after me. So, 250.
POC, it's sitting very high, it didn't move at all, and look like we're building orders here. So let's see if you move lower or not.
Okay.
Dollar is dropping.
The conversations that matter, the insights you need. This is the pulse. I'm talking about Trader Koltun.
We're
Now,
starting to
last week,
print the
after the
trailing
US
stop for
intelligence,
the
Bloomberg
VIX.
understands that China has asked two of the nation's biggest financial firms to examine the books of
Mhm.
international for state-led rescue and determine Meanwhile, Bloomberg has also learned that China's biggest banks are preparing to cut interest rates on existing mortgages and deposits as the latest state-directed measure to shore up economic growth. We'll still with us HSBC Global Chief Economist Janet Henry. Janet, thanks so much for staying with us. When you look at China, what's your biggest concern? So is it retail? We're following. Is it real estate? Actually, we're following all of the concerned defaults. And would it be letting bubble out of the system, or could we actually see a crash that could take the economy down the hill?
I think the property sector is still the biggest concern. We know that there has to be some kind of deflation of the property bubble. We've seen that elsewhere in the world. We saw it in Japan, we saw it in Spain in various decades, and it's over what period and how you manage that deflation of the property bubble. And it's quite clear from the latest round of measures that they are going to do their utmost to avoid any kind of crash. We're not going back to a world where property drove over half of the GDP growth in the Chinese economy, but they don't want it to be so severe that it impacts on the rest of the economy. So I fully expect that we see another slew of measures. We've seen them in recent days, further easing of policy, even allowing people to own a home if they buy a second house.
WNA at 401.
Look like they want to go higher.
On their mortgage for their new home. So that will feed through. Sorry,
Will they work? These measures, so we've seen quite every 4 days there's a new measure that's going to boost the economy and support consumers.
Well, a lot depends on how it feeds through
Bearish search finish, and
but also to confidence.
question will
And
be
of
now.
course, what happens in the labour market. There are still lots of people in China that do not own their own home, never mind their second or their third home, but don't own their first home, who want to. And if they feel confident about
Well, the 1 minute I have a sell sign, but
available loan
it happened at
at a reasonable cost for what they borrow,
4:15 a.m. my time.
to get some kind of stabilisation. And also, we know that there is going to be some kind of restructuring plan, a lot of it related to local government funding, how that can feed through to the economy. So I think it's going to the end of the market. We will
I'm gonna close one of the contracts because we are too green.
some stabilisation in the property.
How are we too green? That's in
Mm,
here.
VIX it's staying kind of early.
No.
Don't know where we'll go. Hoping the dollar can explode up now, so that will be good for us. But
Well, I think it's something that probably can be managed. We know that whenever there are financial strains in the economy, often it's in the smaller banks. Obviously, we had what happened last September with the US banking system, or in the shadow banking system. That's always something that's harder to see what's going on underneath the hood. But these are massive financial institutions. So whether there's some kind of government-led or government-backed solution with the larger institutions taking over the banks, as of course what happened with the US banking system, that will be the interesting side to see. And then it's your usual options. You can restructure the debt, you can sell the assets.
they struggle to go any lower.
Grow their way out.
That what?
They struggle to go lower. And we break the 400.
Well,
We're stalling here.
producers in particular,
We cannot do anything.
impact quite negatively, but we also know
today that there are
That's
various
more stock.
geopolitical developments underway in the world regarding the BRICS and such like that are
Did
leading
he
to
put the levels
complicated
or no? Or you
relationships.
have to
And
put
some
or
commodity
is that
prices
Uh,
are
that one?
still being supported by
I
A24?
by
cannot
support.
hear you. Your
Refined
line
oil
is
prices
breaking.
haven't been too badly. The oil price hasn't been too
That you
badly.
have
But
a note there if it
European
stalls
economies
to go
not
short. Is
being
that for an
affected by
old
nuclear
It's
arms.
a
400?
it's an old level,
The
yeah.
commodity price story is not clear cut.
So even if it's
Oil
there right now,
prices
that doesn't matter.
and all commodity prices
Uh,
globally
by
actually
keeping the old
continue
levels just to
to
see what we're doing
move
around these levels, what's happening.
Oh, okay.
massively to the upside because of food. It still matters.
Janet, thank you so much. Janet Henry here from HSBC stays with us, and we'll talk a little bit later about the UK emergencies. Also coming up, a big win for the crypto sector with more on the Grayscale SEC ruling next. This is Bloomberg.
Yeah, today London is very slow.
The whole session's been slow. Shoot.
Dollar is going lower, and a VIX is not doing anything.
That's like this morning.
Yeah.
Like, well, a session, I mean, New York session.
Okay, I remove one of the contracts
Mm-hmm.
because it wasn't worth to keep it anymore.
Oh, there it goes.
Something's telling do not believe the breakouts. Actually, one of the accounts maybe I should even close completely. Keep only two of them open.
Welcome back, everyone, to Grayscale. Won a heat legal battle in the push to launch a spot Bitcoin ETF. Now, the ruling actually brings the U.S. crypto industry one step closer to tapping billions of dollars from everyday investors. Well, Bloomberg's Kelly Lyons has the details. Grayscale has moved closer to launching a spot-based Bitcoin ETF in the U.S. in what is potentially a watershed moment for the crypto industry. A D.C. Circuit Court handing them a victory when a three-judge appellate panel overturned a decision by the SEC to block the ETF. They said in the ruling, this is a quote, the denial of Grayscale's proposal was arbitrary and
And
capricious,
we
and the
will go
ruling
up.
failed to explain its different treatment of
Why?
similar products. Now,
Because we're not breaking out.
unlike other crypto
Huh?
There is no strength to break the London low yet. In 5 minutes, we've got the
Oh,
news.
good. got a new low just now.
It's not a low, it's just a week. And
Oh.
in 5 minutes, we've got the news from UK that maybe this will move up or down. I move my stop loss to 401 area,
Mhm.
so I will be, if you'll make a new high, I will be stopping a profit. But really
325.
55 will be very nice level to take profits.
And don't miss our interview coming up later today on Bloomberg Markets with the chief executive of Bracewell, Michael Sonnenschein. That's at 3:45 p.m. London. That's 10:45 a.m. New York time. Coming up, we're watching the latest UK mortgage approvals. The data due to land in the next few minutes. This is Bloomberg.
Eighty-two. 82. Hmm.
Got profit against on 15 second.
Bullish or
Bullish, bullish.
bearish?
Profit against bullish.
Hmm.
Oh, come on. Okay, we're at 80. 2
Mhm.
minutes till news. The oil is quite crazy. It's a huge move down, then now it's going up with very big candles. Not trading it today because we've got the news at an hour after open of the New York. So yeah, usually these days is not the easiest one to trade crude. Go lower, go. So my original TP would be hit at now, 78.
Yeah, I see that. Nice.
And command to 15 minutes,
Yeah, but 54
20
almost.
seconds. I wanna see if you'll see this nice big candle or not really. 5, 4,
And what kind of
3.
news is this supposed to be?
It's a UK. Okay, we've got contrarian candle.
Mhm.
It's Wednesday. UK money supply, mortgage approvals.
The latest U.S. jobs and consumer data offer support to investors.
speculating that the Fed is nearing the end of its tightening campaign. Plus, UK Trader Koltun says home sales are on track to drop to the lowest in over a decade. We'll bring you the latest mortgage data very shortly.
We start the contrarian candle
Mm-hmm.
and nothing.
A decade this year, that's according to data from Zoopla. And the latest UK mortgage data is out, and still with us.
Money supply much less than expected.
The ECB and the Fed have it tough. Back in England, they have it tougher because of the tight labor market. That's tight. I mean, it's harder to get people back into work here than anywhere else.
80, 45, 60, 70.
Mortgage approvals much less than expected as well.
Well, the labour market is a particular issue in the UK. We have seen some improvement in
83, 80, 45, 60, 70, 88.
like we've seen in the US or France or Germany. We have this particular problem with inactivity. But we did in the last labour market release see the early signs that the labour market was softening. And as labour markets soften, you see less churn. Like we saw in the US, the quits rate actually fell back, the jolts rate has fallen back. And that's when you get the wage growth. It's when people change jobs rather than getting an 8 or 10% pay rise in their current job. So that's the early signs that if that feeds through, we may see some softening on inflation. But the UK has got the particular
83, 84,
but
60.
also Brexit related. And together with the labour market issue, it's got different parts of the economy are more resilient than others. Parts of the economy have been in a recession for some time. Parts of the economy remain more resilient. It's just not really growing. Jen, we're also getting some UK July mortgage approvals. There are 49,444. The estimate was 51,000. So it's a touch below. It's about, it's a touch below. It's 49.9. Do you worry about the housing market in particular? If you look at all of the data points,
84.
well, when interest rates rise, anyone dependent on leverage feels the pain. And the UK housing market is particularly interesting because of the whole population, about a third of people don't have mortgages because they own their own home. A third of people don't have mortgages because they're renters, and a third of people have got mortgages and they're what's feeling the pain. But the lag's looking through, and this is the challenge the central banks often face. How much higher do you have to go rather than how much do you have to keep it at these levels? But we know in the UK mortgage market, the market's still quite tight. There's not enough houses on the market. How much higher do you think the DOE will go? The language I thought was striking in the last press conference because it mirrored what the ECB was. It was, but the UK is more sensitive to short-term interest rates than
They will test 400 again.
France and Germany, when people take out a 20 or 30-year mortgage, a lot of them have still got their 1.5% mortgage rates for the next 30 years. It doesn't work that way in the UK. 5-year fixes are more important, and that has provided some insulation.
74 is a POC of yesterday.
So it will feed through. So on the Bank of England, it's very similar to our ECB view, actually.
What?
At the next meeting, but rates on hold for quite an extended period, no rate cuts next year. What does it mean for the mortgage market and for house prices? Could we see a crash? I think it's unlikely that we see a crash just given that supply-demand imbalance. There are few in the way of forced sellers. And until you see a significant rise in unemployment, so that would be the trigger. We wouldn't get a property crash unless we were to see quite a significant rise in unemployment of mortgage holders. Janet, when you look at currencies, and I don't know whether sterling can be supported or not, there's quite a lot going on also in UK politics.
What did you say it was going to test?
I think so, 400. It looks like you wanna
I think that the currency
go a little bit higher again.
has rallied from its lows. It's been pretty stable within a tight range against the euro. So actually, I think as much as changes in relative interest
It will go there, it will close one of my accounts. The other one still, it's the stop loss is at 410. Sorry, no, stop loss at entry is at 409, the stop loss 419, which is a full one.
Oh man.
But remember, we've got elections in a lot of places. By the end of 2024, we could have a different administration in the US as well. But regarding investment spending and expectations regarding whether it's something to do with wealth taxes or income taxes and such like, that can affect consumers' decisions and indeed company decisions.
the BOJ, we haven't talked about the BOJ. It's probably the most interesting one out there. I mean, is there a question mark on whether the BOJ will have to get in line with all the other big central banks, or whether actually 2 years from now it will be the other way?
I think Japan has already been quite fascinating. You know, in a world where all the major central banks have been grappling against much higher than expected inflation, Japan is the one country that's celebrating the fact that after 3 decades they might be getting out of deflation. And we obviously have seen some significant modifications in terms of yield curve control. Some people have argued that's played a role in the rise in US bond yields. I think more it's been the strength of the US economy and indeed some fiscal concerns that's driven that. For Japan, if the recovery continues and the labour market side data, it does come through in terms of wage growth and core inflation does continue to rise, that's when I think we see some global implications of it. But a lot needs to go right for Japan to actually be raising interest rates over the course of the next year or just more.
Janet, thanks so much, as always, for joining us. That was Janet Henry, Global Chief Economist at HSBC. Now, let's also go back to some of the latest China data that we've seen. Actually, this is the ICBC coming in real time back to China. So this is two big financials. ICBC, that first half net income coming in at 173 billion yuan. This means that year on year it's up 1.2%. We also have Bank of China, that net income is up 0.8% year on year. So we'll be covering all things China. We'll also be covering all things UK, and that's a little bit later on in the week. We'll have plenty more in China, including a Bloomberg scoop saying that China has asked two of the nation's biggest financial firms to examine the books of Zhongrong International, potentially paving the way then for its
Wow.
rescue of the troubled shadow lender. That's according to people familiar with the matter. There's a Bloomberg scoop, and we'll have plenty more on that next. This
Nope.
is Bloomberg.
What did I do in the first one?
Up and down.
Yeah.
We're making slowly in euros, but whatever we're making, and we're retracing it back. So
Yeah. Did it print that recently? It did print. It printed it at 86.50, 86.75. Oh my god.
ATR is raising, which is good for the bears, but they're not showing any attention.
Hmm.
You trying to take some trade?
I wanted to take a long. Well, I'm in a long, but not going well.
Okay, now everything showing me again we are bearish, which I am very happy because all of the backgrounds they changed to
Mm-hmm.
red. Bonds, VIX, dollar, yen, everything. It's bearish. So as we had some mixed situation here because the yen and the dollar was a different color. So
Mhm.
everything now is the same.
He urges China helping Russia's war in Ukraine to end as he tries to mend the UK's ties with the world's second largest economy. Let's bring in Bloomberg Sofia Ortega Costa,
They
market
usually
challenger.
go up.
But first, we also got some pretty big headlines, Sofia, on, of course, China asking the biggest financial firms to look at shadow banking. Is this a window? Should we be concerned about this? This is
And
the
1 minute.
it does seem like
Three
Beijing
thirty
is
nine.
looking to perhaps lead a state-backed
339.
transformation of shadow bank. So what essentially happened is shadow banks, they're the alternative funding source for
What time
not
is
just
it?
developers, but for companies that can't get loans via
Okay.
banks because the lending conditions are so strict in China. So the concern is that there could be a cascade of financial risk if we do get this company collapsing in a disorderly fashion. So the fact that CITIC and CCB trusts, two companies that are linked to state-backed lenders, are looking at the finances of this shadow bank suggests that the same that happened to China Huarong, the bad debt manager in 2021, could also happen to the shadow bank. And so what this tells me, Fran, is that authorities are kind of tightening their grip and also
87.
increasingly concerned that this could spill over to
88.
the rest of the financial system.
But is it something that they can manage, or could we see a significant financial event? Again, shadow banking is one of the trends since the actual
537.
Iran Taiwan conflict and civil unrest.
Yes, I mean, the problem is that it's not entirely clear how big it is. There are estimates over the size of the shadow banking sector, and China has cracked down on it in recent years and made it smaller because of the spillover risks to the financial system. China did handle the Huarong crisis quite well, and there wasn't a spillover back then. Actually, it was almost a poster child of how to do a state-backed restructuring and bailout. It was a big one back then. So if they follow the same playbook and the restructuring follows through in the same way that it did, then it could be positive. I mean, you do want the states, you do want Beijing to kind of take charge here because of the risks that it poses to the economy in general.
So, let's also talk about politics, but first let's hear from the UK Foreign Secretary, James Cleverly, who's also in China. Here's this.
Well, my visit here is about the bilateral relationship between the UK and China. In my meetings, both here and in previous meetings in the UK, I have said that Russia's brutal invasion of Ukraine cannot be justified by Moscow or indeed anywhere else.
So we have the UK Foreign Secretary there at the moment, we have the US Commerce Secretary also in Shanghai. Is this a general push from the West to go to China for friendlier ties, and what do they need from China?
I think that's a really important question, Fran. And how the Commerce Secretary, the U.S. Commerce Secretary, Gina Raimondo, separated the two things. One is diplomacy.
Okay, so there is what is this? We have
The US are
something
pressuring
here.
China
That
to
is
keep not only Russia,
87.
Ukraine
What
off
is
our
that?
banks, but also Taiwan, Hong Kong. A lot of interest there. That's one
At the
point, and
market
I think
structure,
it
yep,
supports the back that
387.
China holds, who really want that pressure to
Pretty
continue.
short
The other side of things, and this has been very
at
important, both from
387.
the US and the UK, say these are two separate things, is economic ties. Right. So strengthening those ties, that can coexist essentially with more pressure on the diplomatic side of things. And I think that's where the messaging is right now, because it is important for the UK, especially following Brexit, to show that there are benefits to being in the European Union, and one of them is to renegotiate on the trade front and to kind of have a little bit more control over that China economic relationship.
So what's your take on the Foreign Secretary, James Cleverly? What was his welcome like? I know a lot of the times it's about the body language. Do they welcome the UK more than the US?
I think the US meeting from the China perspective is
Okay,
important.
so it's trying to break the trading stop.
The UK meeting, and I think there's a perception in Beijing that the
Dollar
UK
going
does
down.
whatever the US says. I'm sure the UK would have its own
VIX trying
response
to
to
go
that.
higher, but nothing.
But
It's
it
really
was a
moving.
normal outcome. I
I'll
mean,
be back in a few
China
minutes.
and Beijing, authorities in Beijing are seeking to
Okay,
engage
let me
more
see. I don't.
directly
I'm gonna
with
see it.
external
Oh,
reinforcements
Sandra.
Chinese policy. There's a lot of domestic issues that China is going through, both on the business
387.
level, not least with the property market, but re-engaging with the West and projecting this kind of more business-friendly approach is a very, very important step towards attracting foreign investment. So I'm sure he was warmly welcomed.
When you look at, I mean, the good news is
And
Australia
short-term
has
momentum.
to China. Is that, I don't know how China
Where do you see that break?
And exactly, I mean,
Oh,
incredibly
that
sad
was
that we
minute
can't kind of legitimize
breakout
Putin.
on the 3 minute.
Clearly, China's support of Putin, diplomatic support, not really the kind of supports that would concern the US and the UK quite yet. But how will China welcome Putin and how will it position itself with this visit? The last time Putin visited China was 3 weeks before Russia invaded Ukraine, widely perceived
How
to
is
be
that a
one of the
breakout?
best for China at the time because it was when Xi and Putin declared this kind of no limits friendship.
Okay,
So
let me get
how
out
will
of this
China
thing
position
here.
itself here? Will it be a neutral actor try to end the war? That's how it's been trying to project itself in recent weeks. Or will we again get a kind of closer relationship between the two countries that could potentially worry the US and the UK? Sophia, thank you so much as always. Sophia, I'll take across the very latest on China, both the politics but also the economics. Now, coming up, airlines scrambling to recover from the biggest aviation outage in the UK for a decade. We'll have our reporter here with me in the studio. This is Bloomberg.
277.
Okay, so birthday trying to win that.
Yeah, it was a reversal.
You
I
still
mean, I'm
near
sorry, a
long?
breakout. Huh?
You
Yeah, I
still?
already got out.
You get out.
No, I got out. I took the loss.
Okay.
I just not. I don't. I see a long like because I don't know. I'm stuck.
You see the long because you are late for the short. No, but this is true. I'm not joking. It's true. It's like yesterday, lots of people tried to short the move up in the
Uh-huh.
evening because they was late for the long.
Mhm. Maybe,
And
but
everybody was planning retracement yesterday. It didn't happen. So far today
mhm.
as well, it didn't happen. But we go lower than we was doing it on yesterday New York session. As you can see, a lot of people was trying to short here towards the end of the day, 6, 7 o'clock, and we was going higher and higher. And
Mhm.
we broke already the previous low, which was at 88. And the next one, yeah, the next level will be 50, 58.
Which is
Uh,
at the WMA.
yeah, I got the TP at 56. But for that to happen, the best really need to push it, and that don't look anymore. So okay, we're going below the line. That's good. I don't
Mhm.
know. We'll see.
And then it's too late for me to get into the short because it's gonna come back up, and then I'm gonna lose anyway.
Yeah.
I'm too. I mean, and where are we?
This is the pulse
Now entry
We're
short
already
definitely is
we're in
not the
the
best.
we're in the cheap area.
Commerce Secretary. She
But
said
that's what
this
I'm saying. That's why I see a long. We're in the cheap area,
yesterday, and she was saying 24 hours ago
you know.
that U.S. companies have been telling her that China is becoming increasingly uninvestable because of
Hmm.
rising risks doing business
It's cheap
with
for
the
now.
world's second largest
Huh?
economy.
It's cheap for now. In 1 hour, you got the new candle. So,
The comments, of course, from top
In an
and
diplomacy
hour.
yeah,
underscore that commerce has become one of the main strands of tension between the U.S. and China, even as she and Chinese officials that she met last week seem to stress that the economic ties are key to sustaining a working relationship. So we'll see, of course, from her comments and her body language what that will lead to. Now, China Airlines is planning to boost its fleet with more fuel-efficient aircraft as part of its sustainability push.
The president of Taiwan's main carrier tells Bloomberg that the airline is looking for a new balance between cargo and passenger in the post-COVID times.
We are coming back. We are coming back. The passenger is about 50%
I got in at 388 and I got out of my trade already.
A lot of contract was closing actually, the shorts here. 140 was close. Okay, let's see. Strong load is low is at 57. Yeah, I'm not moving in. I'm not moving my. Just keep them as it is. One hour before the open of the New York market, we should see nice big moves, but
1 hour before. What do you mean?
New York
Our market
market,
just.
we've got the farm employment change. So,
Mm.
and then we got the GDP. So, yeah, expecting that there will be some moves. But then,
What kind of move?
I don't know. The candles can go, as usually, they're going crazy, both all of the directions. I'll go to the 300.
And what did I say earlier? I'm gonna take a short at the WMA, and I didn't take a short. Oh,
I done it for you.
oh, thank you. And I even said I'm gonna wait, but then it turned green, so it gave me like I was scared, and it doesn't matter because then I got in the trade and I lost anyway because I went long. So I shouldn't have been scared. I should have just got into the short. You know?
This is
Yeah.
what market doing to us.
Yeah, so what we know so far is that the NATS, which is responsible for airspace control in the UK, has said that a piece of incorrect data is responsible for the system shutting down, and it was part of an automatic
There's
process.
nothing wrong with it. This is what market doing to us.
And that really caused an outage that affected a quarter, more than a quarter of flights coming in and going out.
See if it breaks your low, 77.75.
And so it's really the airline industry has to now bring back their sort of aircraft, bring back crews, and sort of restore operations. And because of the cancellations and delays, aircraft that should have been in one place are in another place, and crews are out of hours. And because of that, it takes a while to rebuild operations. And so we have seen sort of continued cancellations, but obviously a smaller volume than on Monday.
So how long does it take usually? And do they, try and safeguard
Come on, VIX, go higher.
and actually prefer the impact
Good.
of more short
I would like to see VIX really going back to 15.
We don't yet have an estimate.
Mm-hmm.
Then we'll have some action.
NATS has said that they're going to put out a preliminary report on what really happened on Monday.
In 6 minutes, I will be just closing the session. I need to go and do a few things, but I will stay in my shorts definitely.
Mm-hmm.
Okay, NQ, just a week off and break the structure.
Where it touched the low, but it didn't break it.
On Ninja Trader, where I've got the tick data, it's showing that with few ticks, it's broke the structure. Previously one was on 0.75 and now we was 0.775, so quarter of the point.
Right. So VIX is going up.
VIX is going up, yeah. It's at the high of the day.
Mm.
And look like the dollar I hope so will start to go up as well. Oh la la, what's that?
Yeah. Where's the WMA? It's at 58. And I called it earlier that I was expecting it to hit the WMA 15 minute, but um, it's already gonna be formed. The VIX is going up. Dollar VIX.
VIX reject the high of the day so far. Just now. Dollar, it's below 200. But we start to print two trailing stops for the bulls.
We're printing one.
Two trailing stops for the bulls on dollar.
Oh, I was gonna say like what? Because I don't see it. I don't see no trading stop. Right? I see the market structure as a bull, as a bearish,
Bearish, yeah.
and I have nothing on that at the moment.
Okay, where we are super cheap.
We are.
Now I'm checking the next. Okay, if we can go to 5 to 70, it would be nice. 303. Okay.
Any more news coming or no?
On a Europe now, then we're waiting only for US now.
Yesterday when it dropped, was it yesterday that I dropped that I didn't get on right? When did
Yesterday
it like?
was yesterday was very nice bullish trend, so it didn't drop.
Oh, was it? Okay. I thought it was. I thought it was a short because I mean yesterday London.
I don't know. I didn't trade the London yesterday.
Oh, okay, okay.
You can check it. What was happening yesterday, London? London was quite neutral. It wasn't have a big moves.
Hmm.
There was a drop on London, yes, because it made a new high and then clear the liquidity from the Sydney. Come on, go lower. Can you break the structure? And rejection.
It didn't break your low.
It
It barely
was.
tapped it.
It was.
Oh
The,
my
the,
goodness.
the previous low was on 77.75
Uh-huh.
and now one is 76.50. But yeah, as you can see, we just tap the low and rejection, tap the low and rejection.
Mhm. So 160, I'm thinking.
Still, like, I've got the TP at 56, and then the next TP is at 303.
Hmm.
Cassandra, I will be finishing now.
Okay, that is
It's
fine.
10 o'clock.
Talk to you later.
We'll, yeah, talk to you later. Bye.
Bye.